Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the SPY and the data sets for April 23rd, 2025. And with that said, let's go ahead and jump straight into the data. And I will preface this video that it is going to be shorter because I recorded the whole video, and my mic apparently wasn't turned on or something, so I spent 25 minutes on a video, um, which but ended up being longer than that. But anyway, re-recording it. So let's go from here. Um, Tomorrow we don't have a whole lot of important data. We have the building permits in the pre-market, which really isn't going to move the market a whole ton. We have Fed Waller speaking at 9:30, so right at open. He usually doesn't say a whole lot that's going to move the market. So I'm not anticipating he's going to say something that's going to shift the direction one way or another too much. But as always, we need to be paying attention to what the Fed's saying right now, just because of the uncertainty in the air of just everything. At 9:45, so 15 minutes after open, there will be the manufacturing PMI data. This can be somewhat important, but it's not something that I think is gonna move the market a whole ton. I can be wrong about this, but um, the consensus and forecasts aren't really expecting anything crazy. So unless we get some sort of data set that's leaning, really sharply one way or the other, then I'm not really expecting, that to move the market a whole lot. Same with the new home sales at 10. Um, you can kind of package these all together in one. Uh, Really not expecting a whole lot from those. Now we have the 5-year auction. We had the 2-year auction today, and out of that auction we actually saw reduced yields. Um, Yesterday, let's see. So there it is. So we got 0.2% reduced yields, which is, that's a positive thing, right? I didn't expect it to happen so soon. I expected the yields to actually pull up. So that is a good thing. But with that said, very likely we will see the 5-year following behind that very slightly. So very likely a slight pull down in the yield. Now, the big important data set for tomorrow is the Beige Book, and I mentioned that in my Sunday video. But the Beige Book goes over um, all of the central banking districts, and they reach out to local businesses and basically get a consensus of, the environment, of the consumers, of how they're buying, selling, how hiring's going, if there's layoffs, just the whole labor market and uh, economic market. So that's a really good data set. It's a consensus of all of the districts, and it shows which districts are gaining strength or losing strength um, compared to the previous report. So it's a really hands-on set of data. Now, usually I'd go over earnings, but we really don't have any major earnings coming out today. We had Tesla come out yesterday. Uh, it did not do well, but since Elon Musk is leaving his position at Doge for a while and returning to the company, Tesla is doing extremely well in the overnight. And this is something I discussed in my Sunday video as well, is that uh, I don't really think anyone expected Tesla's earnings to do great. Everyone knows Tesla is kind of suffering right now, but there was more of the political aspect behind it, and more of um, where Tesla's gonna move on from here. Now, Tesla didn't provide a guidance, and again, they did have a double miss. So, um, this overnight action could fall off essentially fairly quick. It could just be kind of a euphoria rally type of thing. Now, there's a few other reasons why we're really rallying overnight. And two of those reasons are because President Trump discussed not firing Chairman Powell. So the market took that as extremely bullish, and also President Trump mentioned something about the Chinese tariffs. Um, I don't know exactly what was said. I'll have to find out tomorrow, but I believe he mentioned something that the rate won't be 145%. So, and that there's trying to be some sort of deal being agreed upon. So we'll see how that plays out. Um, but yeah, other than that, not a really data-packed day tomorrow other than the beige book. But again, most of the market participants don't pay attention to that. Usually it's just the big firms and weird people like me. So just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And with that said, let's go ahead and get to the technical analysis, and let's pull up the Bollingers and the moving averages. And we have kind of a crazy session going on. So the overnight is currently at 535, which is, up massively compared to the close. We closed at 527.25, and that's, you know, massive compared to the previous close, which was at 513.88. So we've been bouncing around quite a bit. With that said, it's important to know that since the market is at 527.25, we're very, very close to both the 5 mile and the 10 mile. So the 5 mile is at 526.16 and the 10 mile is at 527.36. So we essentially closed right on the 10 mile today, but that means that the 5 mile is going to pull up very slightly, and the 10 mile and the 5 mile are going to be essentially right on top of each other and consolidating. That's kind of a bullish signal, but it can also be a bearish signal if we see major rejection from here. Now, the 20 MA is at 538.58, and oddly enough, in the overnight market, we hit 537. I want to say 537.80 something. I don't know the exact cents right now, but very close to that level. I don't know if the market is taking that as a rejection. I wouldn't say that yet, but if we do maintain this value overnight, then we are pretty much right at that 20 mile level, and right within testing range. Now, we are still far away from the 200 mile, but I'm gonna mention it anyway. It's at 570.18. Um, still a whole $30 away, but you see how the market has been over the last few days. I mean, we've already moved a whole $30 within 2 days, so um, that may not be that far, depending on how bullish the market gets. Now, the lower Bollinger is at 491.79. It's flattening out right now because we had the last 2 days being fairly bullish. Um, Again, as the 20 mile pulls upward, the upper Bollinger and the bottom Bollinger are going to expand, so they're going to widen. And as this pulls down, as the 20 mile pulls downward, they are going to, condense. So with the 20 mile slowly pulling upward, that's why we're seeing that flatten out. It's basically like kind of this area right here, how you see it's flattening out right there. Some of these other areas you can tell it's kind of flattening out, and that's just consolidation. It's trying to pull the moving averages together and just trying to pull everything together and brace for the next big move. So, yeah, it's far away, but again, not too far. Now, the ADL is still fairly flat right now. It did move upward, but if you remember me just talking about this the last few weeks, there's basically this channel right here in the money flow, and we're right back within that channel. So during the beginning of the correction, or during the majority of the correction, we sat within this channel of the money flow where we'd sell, buy, sell, buy, sell, buy, and it was just bouncing in between here. We're back in that area in the money flow, so we just need to be aware that we might be seeing some more of that consolidating of the funds in here. We'll see, but that's just something to be aware of. Now, going over the hourly chart, we have a really interesting cup closing. And let's go ahead and pull up the drawings and the drawing tool. So we have this really nice cup right here. And we talked about this cup potentially closing, over the last few videos. But this was a real possibility that if we did not see some major rejection, we could see this cup closing. Now, as bullish as this can still be a very bearish structure. And I'm going to just show this as blue, but we still have this major inverse cup right here. I'm going to redo that because I want that to show a little better. We have this major inverse cup right here, and potentially this area that we are building on right now that is rallying can still be the handle for this. We are not invalidating this major inverse cup yet with this buying, even though it might look like it. We're not. We still have technically a full up until the 545 range to fully invalidate this structure. So that's what I'm kind of looking for right here is that one, we have this bullish cup. Okay. Out of this bullish cup and in this range, we should start looking for a bearish structure. And why are we looking for a bearish structure? Is because at the top of a cup's handle, you want to find a bearish structure to pull it downward. Okay, and that's how you form that bullish structure, right? That's how you get the handle on the cup. Out of the bottom of this handle, and this is kind of the difference of where the bear thesis and the bull thesis kind of split here. The bulls are looking for a bullish structure at the bottom of this handle. Now, granted, I don't know if the bottom of this handle is going to be in this area. It can be higher, it can be lower, but primarily you want to look for the structure because that's going to tell you where the bottom of the handle is, because the structure is telling you if there's a bull structure here, it's saying, okay, we're now going to head upward. That's the bullish thesis. The bullish thesis would be to build the handle on this cup, come down, build a bullish structure, and have the breakout. Okay? The bearish thesis is for this not to happen. So for this bullish structure to build right here, the bears are looking for this to just essentially reject. And what they want is not just a full-on rejection. They want this to actually be brought down towards this area. Sorry, I'm just trying to drag these right here so I can show you. And to finish out that inverse cup, so that's kind of the difference between the bull thesis and the bear thesis. We both want the same thing with this liquidity right here. We both want to build additional liquidity, but the difference is that bulls want to build support upon this liquidity, where bears want this to break out and continue downward and finish out this handle or this inverse handle. So what I'm looking for from here is that one, we tested the 5 mile. We tested that level very well today. And what happens after a 5 test is that generally we will go to either the nearest Bollinger, which is, the upper lower Bollinger, or we will travel to the 20 mile. So where are we right now in the after hours? We're right near the 20 mile. So that would be a very good area to reject from. seeing how we're essentially right on it. It's at the 538.58. So what I'm looking for is essentially for that 20 mile to be tested and to be rejected. If it's not rejected, then there's something else we'll look for, and that's something I'm going to discuss later. Um, in another video, probably tomorrow, if we, happen to see that. But what we should be looking for from this is some sort of handle forming and some sort of top of the handle forming here. Um, that would fit the scenario for both the Bulls and the Bears. It doesn't matter how much we're breaking out overnight or anything. Um, this cup right here is a ton of liquidity. Uh, it's actually like a really massive amount of liquidity. It's over $40 of liquidity that the Bulls would love to have to break out and get back to the 570 range. The Bears are in the same boat. We're back at the 20 ma. This would be a perfect area to build liquidity, reject down, and head back to test the 5 ma and then head back to the bottom Bollinger. So that's kind of the thesis for now. I'll try to talk about this on more of a grand scale thing, but I've had a really long few days, really exhausted. So just breaking it down very simply, playing the day tomorrow, you're really looking for a bearish structure to form, and whether that's a head and shoulders or a inverse cup, that's kind of what structure you're looking for is a bearish structure. And that's going to be for both bullish and bearish liquidity. Uh, so with that said, that's kind of the game plan for tomorrow. Look for the 20 ma. If we happen to reject the 20 ma, then look to the 5 ma because the 5 ma is at the 526.16. It's very likely going to be around between the 525 to the 527 range. So if we happen to reject the 20 ma pretty hard, then that's the next area we need to look towards is what the market does with the 5 ma again. So just go level by level. I know some have been kind of getting overwhelmed with the movements in this market, but it's kind of like I've been saying over the last few days. Just when we get to like the 5 ma, that's your time to set up positions, and it's kind of like in the video last night if you watched it. Today played out almost exactly to a T for what we discussed in last night's video, and if you made a real game plan around that video, you would have uh, calls that are 2 to 4 weeks out right now that are in the money, and you'd also have puts that are 2 to 4 weeks out and currently absolute toast. But you'd have both those positions, and you would have been ready for the next big move from the 5 ma, whether it would have been heading up to the 20 ma again or breaking back down to the bottom Bollinger. So we just need to use our levels properly, and the 20 ma is another really good level to set up on. And I'm just going to very quickly go over this, but the moving averages kind of work like this. So you have the 5 ma. That's essentially telling you that that level is tested once every week, once every 5 sessions. So you can assume the market's going to pull to that level once every 5 sessions, or even more. The 10 ma, it's 2 weeks out. So every 10 sessions, you can assume to pull towards the 10 ma level. The 20 ma, it's a whole month out. So again, every month, just about every month to a half, you can assume to test the 20 ma level. Um, you just set up on those positions and move level to level. We know that we're going to test the 5 ma every week. We know that we can safely set up on that 5 ma and have positions out for 1 to 2 weeks, and we know that within 1 to 2 weeks we'll be testing the 10 ma, and within 2 to 4 weeks we'll be testing the 20 ma. So kind of just think about that when you're trading in this market because it's very hard to set up super long positions and just let them ride because it's not like we're having some singular direction here. I mean, we're having probably some of the most volatility in the market that the market's seen in years, probably since COVID, if not one of the most volatile times if at you know in history. So um, keep trading safely. I know, like I said, I know many are discouraged, but there's many right now that are getting absolutely blown away by this chop and by this movement. So if you are holding somewhat strong and holding green in your portfolio, then you should be really proud of yourself right now because many aren't. Um, I didn't profit as much as I wanted to from this move. Uh, I was actually anticipating it to start rejecting in this area, but that's kind of why we set up on the 5 mile, right in that range. Now I have calls that are in the money right here. Yeah, I have some puts that are kind of underwater right now, but that's, we can't control the market. We only have to prepare for it, and then I don't know, not to get all sentimental or anything, but the market's kind of like riding a raft on a river, I guess. You can see where the river's going, kind of, sort of, but you know, doesn't really matter how experienced you are. If you hit the white waters, you're still gonna be in for a ride. Um, doesn't really matter how experienced you are. There's experienced rafters that drown all the time. Uh, so yeah, just keep your head up. Um, keep working on what's working, and like I said, let's focus level to level. So anyway, I'll stop rambling. Uh, have a good night, everybody. Have a good day. Trade safe, and I'll talk to you in the next video.